Marksman Capital Presence.
When it comes to trading breakout, this is probably one of the most common strategy that most traders come to know. There are two different approaches to trade breakouts. Here I'm going to present the most common versus alternate approach.
Analysis retrieved successfully. Onboarding Striker X now. 3, 2, 1, start sequence.
Why breakout patterns? To time entries and exits. Now this is primarily for swing traders. And let's look at the different type of patterns. You've probably seen these patterns shared abroad the internet. The patterns are so common and it is the most discussed patterns in some channels. So there's a reason for this. But if you watch until the end of the part 2 video, you will see why these patterns look so easily recognizable and why it is so mechanical. These patterns are just stalling patterns or consolidation patterns before making the next rally. So if you look at patterns 1 and 2, they are, or even 4 and 5, they are the most common patterns that you can see in a chart. But we'll later go into some of the examples that we can see in some of the stocks. So yes, some of the names here are fancy. We just have to remember the concept of trading in the later part. Here's a unique pattern right here. Diamond in an uptrend continuation pattern, in which there's a symmetrical triangle on the right hand side, in which there's a price squeeze right here, or indecisiveness between buyers and sellers. So you can see once there's a breakout, the volume of the buyers, on the later part we will show, on the volume of the buyers will overwhelm the volume of the sellers. But of course, you cannot see that in the chart, but that's what it says right here, that the sellers would have to cover their shorts, all right? And it is also known to close their losing positions, all right, to buy to close, igniting a momentum upwards for the rally. All right, some people call it short squeeze. All right, so let's just keep things simple right here and remember all these 12 patterns. And sometimes broadening wedge are patterns that can vary a little bit. It can have a horizontal resistance before breaking out, or it can have actually a diagonal line descending before breaking upwards. So these are the two variations of broadening wedge. So other than that, let's go to the rules to trade breakouts patterns on the common approach. So the strategies to trade this is, now let's say if we take bullish flag pattern for example, and how to confirm it is a breakout pattern. So once there's a rally, we can see there's a stalling pattern. So this is almost 3 waves down here, and this is where you can draw a resistance and a support. So on average, all right, it doesn't have to be connecting from line from bottom to bottom. I mean from point to point on the exact bottom. So we are just taking the average. So now right here, what can happen is, now you can see there's also one more bottom forming here, the third wave. Then this is where we prepare to anticipate for a breakout. So once the price is rallying upwards, and this is where we would want to anticipate for a breakout right here at that yellow circle. And so if there's a breakout, we would prefer a candle, all right, that's accompanied by higher than average volumes. At the same time, a full body breakout is preferred. It can gap up and close above this resistance right here, and then it takes a rally upwards. All right, but as the rally goes upwards, you can see the volume starts to fade a little bit. All right, so breakout volume, and this is like all the buyers starts to come in and rush in to push the price upwards. So the sellers are giving way, and they're actually closing their losing positions, and it will create a huge momentum upwards. So this is the mass psychology of the market also as well, looking at breakout patterns. So now another way to look at it is, just now we have a full body, a full candle out from the resistance. Now if there's no, if there's another candle that's just opening below the resistance, it has to close more than 50% above the resistance line. So this is also indicating there's commitment from the bullish traders. And after that, we will anticipate a rally. So now, another way to trade it is that we wait for a retracement. Right? So this is safer, but the thing is that it doesn't happen all the time. Sometimes when it breaks out, then the price rallies without retracing. And this is where it retraces. And this is where it gives a second chance for a trader to enter at a lower price or safer point, they call it, right? So before the rally goes on. Now, what are the strategies? How do we measure the profit target and place the stop loss? All right, how do we enter in this kind of trades? So if we look at the bullish flag, for example, and we want to measure the point where if there was a turning point or before the next wave. So we take one of these impulse wave, point A to point B is an impulse wave, right? So there's an impulse wave up there, and you take that kind of the same measurement and place it right here, the targets. All right, so you can always draw a line here, then transfer this line to set the target here. So the entry is always here, aggressive entries. All right, then the stop loss will be around here, so which I will mention in my next slide. Okay, so this is how it is set. So entry, stop loss, and entry between the entry and the stop loss, it is known as 1R, which means we lose. Let's say, for instance, if you have a big portfolio, if you want to lose, if we want to risk, we risk 1% of our portfolio. But if we want to win, we want at least 2% of our portfolio so that the profits can cover the losses. And usually, this kind of trades, the entry is always a buy stop order. This entry right here, it's a buy stop order, which I will elaborate in some other videos. All right, so it's an aggressive take where it is used to chase momentum once the price breaks out from a significant resistance. All right, so well, trading alongside with deep experienced traders is like standing on the shoulders of a giant. All right, here's the last message. So Striker X here, happy trading and investing, signing out. If you like this video, please hit the subscribe and like button, and also notification button if you like to get more of these videos, and we will provide the link below in the description column.